Hey guys, welcome back. Now, 2024 is turning out to be a year with quite a lot of uncertainty. And I'm beginning to see a larger divergence between the bulls and the bears. On one hand, we have some financial experts that are getting more and more bearish on 2024. And then on the other, we have some financial experts that are still massively bullish. And so the question is, who is right? And so in this video, we're going to be taking a look at two opposing viewpoints, and then you can judge for yourself. Firstly, we have Gareth Soloway, a full-time trader of 20 years and well known for calling the Bitcoin top in the last cycle. And then we'll hear from Arthur Hayes, a former crypto billionaire and founder of the crypto exchange BitMEX. And first we'll take a look at the bear case and see how low could prices be going, and then we'll take a look at the bull case and we'll see how high prices could be going. So I think there's going to be something in here for everyone. Okay, so first up, let's start with the bear case given to us by Gareth Soloway, and why does he think that there's going to be another massive sell-off in risk assets?
I've been pretty adamant saying that I do believe that we'll get down to that 3% handle, and then getting from 3 to 2 is always the toughest thing. And I continue to see the reminiscences of what happened in the 1970s. And in fact, I can show my chart right here and we can just kind of take a look at it. But basically what we see here is this was the 1970s, and you had that initial uptick, and then the Fed obviously kind of stepped aside and inflation came down. And then we had another wave of inflation went higher. The same thing pulled back. We had another wave higher as well. And then finally it got back under control. And I really think that, you know, as much as the Fed has said they don't want to repeat what Volcker did, this is the pullback here, right? This is where we were. We were trading around $9 trillion. They've only been able to reduce their balance sheet to about $7.5 trillion. And that's while the U.S. deficit has risen multiples of that over just the couple years, right? So again, my point being is that when it comes down to it, you're in a scenario where the Fed, yeah, they've tried to tighten, but the market has actually loosened. And then you talk about the extra money in the system, from credit card debt to auto loans to the U.S. deficit. And it really hasn't been that tight. And I think that's probably why the stock market is at all-time highs as well. If you can't get the inflation rate in this period below 3%, and we start seeing an economy that's weakening, and by the way, Cisco laying off 4,000 people. I mean, we've seen layoffs starting to compound. We've seen the retail sales just came out a couple days ago, and those are starting to get weak. So what the market was prepping for initially before CPI and PPI this week was, we're going to have a perfect landing. There's no landing. The economy is going to stay strong, and the Fed is still going to cut rates. That's a great scenario for stocks, right? That's like the best of all worlds. But now it's getting a little bit trickier, and this is where things that have gotten into bubble territory may start coming in very, very quickly.
And so his thesis revolves around inflation, and he thinks we could be falling into another 1970s style inflation. Last week, we did see the CPI come down from 3.4% to 3.1%. However, it didn't fall as much as expected. And then with PPI that followed, this actually increased, which the markets didn't like at all. And he says if we can't get inflation down to 2% now, what happens when the economy weakens further? And this is why he thinks we're going to get some big sell-offs coming. But the question is, how bad is it going to get?
I think my point is this, is that when you look at the kind of the froth in the system, and right. Remember what I said earlier in this interview, folks, it's one of the biggest calls I'm known for of nailing the Bitcoin top at 69,000, is that when I see social media behaving like it is behaving, it is exactly like that in stocks, not so much in crypto, but in stocks in particular, as those same indicators back then. And that is a warning sign of, the people saying, hey, you can just close your eyes and throw a dart at a dartboard and you'll get a winning stock and you'll make money. And that's a concern to me. So I do think we're kind of coming into a risk-off environment. How big of a pullback? My thesis is that if we see a 20, 30% correction in the stock market, which would be kind of run-of-your-mill after the NASDAQ's up, 60% since October of 2022, you then have to talk about Bitcoin possibly coming back to 30 to 32,000 on the charts.
So a 20 to 30% drop in the stock market, and I think he's referring to the NASDAQ, and then Bitcoin would fall back down to as low as $30,000, which would be over a 40% drop from here. Now, a 40% drop in Bitcoin would be Armageddon for the altcoins, which would probably fall double, so up to 80%. So clearly, this would be another massive sell-off in crypto. Okay, and now for the good news, on to the bull case given to us by Arthur Hayes. However, interestingly, it isn't just a straight line up for crypto. This would also be born out of another crisis.
So I think it all centers around commercial real estate in the United States. It's a massive asset class. The biggest market in the US would be New York City. I don't know how many, millions of square feet of office space are built. And that's the issue. All these banks loaded into this group of like super safe US commercial real estate. And then half the people decided they don't need to come in the office anymore. And these things are worth less. Now, is it a 20% decline, 30%, 40%? I don't really know. There's some selected transactions that are, down a lot. And the problem is these banks have these loans and they don't want to recognize these losses, because if you recognize a 50% hit on an asset class, that's a few $1 trillion collectively across many U.S. large and small banks. Essentially, the U.S. banking system's insolvent. The question is, okay, is New York Community Bank, it's down, 60-something% in the last week and a half. Are they the first or the last? I think they're going to be allowed to fail. I think that once they're allowed to fail, and maybe that happens in a week or 3 weeks or whatever it is, then the crisis spreads to larger banks. And at a certain point, it gets politically unpalatable for the Fed to allow a very substantial, too big to fail bank to fail. And at that point, they start printing money again. And so I think that coincides sometime in the March timeframe. For whatever reason, if we believe that commercial real estate is going to be recognized as a problem, investors are going to flee these stocks for safety, because why would you want to be in a bank that could be bailed out or not could be bailed out? Just might as well just get the fuck out of it and save yourself the hassle. Then we could have a banking crisis, which then will prompt the Fed to print more money, and then everybody goes and buys Lambos because crypto goes nuts. Right? That's kind of the thesis.
And so his thesis is that we're going to see another banking crisis part 2, and this is brought on by commercial real estate. Now, post-COVID, only half the amount of people are going back to the office. So theoretically, these properties should be worth up to 50% less than they are, making all the banks in the US insolvent. And he thinks that small banks will keep getting squeezed, many will start to go under. This will lead then to the big banks and leading to another massive bailout for the banks, aka the Fed being forced to print another epic amount of money. But I'm pretty sure it's going to be under a very different name. And then importantly, this is what's going to make crypto skyrocket to the moon, as it reflects all this new monetary debasement. And it's able to do this because it sits outside of the traditional banking system. And so the question is, how high could things then be going?
And then, yes, I think that we're going to print the most amount of money ever in human history in the next, 2 to 4 years, because we have a lot of elections coming up. And, how do you get reelected? You give people free shit that they don't pay for in an obvious fashion. They always pay for it. Inflation or taxes, choose one. And then we have a lot of wars. Wars are very inflationary. Everybody around the world's increasing the defense budget to throw bombs at each other. And then we have the money printing to pay for the war, right? So it's all building itself into a super cycle of technology and money printing that I think is going to make this particular crypto bull market the biggest one that we've seen in terms of gains of $1 trillion of market cap that is, all of a sudden going to be present in our little ecosystem.
2024 is turning out to be a year with a lot of uncertainty, with a big build-up of the bulls and the bears. For the bears, we had Gareth Soloway, who believes that we're headed to a 1970s style scenario, where inflation will come back again, leading to another risk-off environment where tech stocks will fall 20 to 30% and Bitcoin up to 40%. And then we had Arthur Hayes, who believes we're going to get another banking crisis caused by commercial real estate. And this will lead the Fed to do another record bailout for the banks. And with the record amount of new money that's created, we'll see a super cycle for tech stocks and crypto, where we'll get the biggest bull market in crypto yet, creating several new trillion-dollar crypto assets. So there you are, guys. Interesting points of view, as you saw, and interesting that even the bull case would start with a crisis. So all I can say is that it reiterates that we should never just copy off one person's advice. Be sure to position yourself so you can accept whatever happens, as ultimately no one knows where things are going. So after all of this, are you bullish or bearish? Let me know below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.